Stop arguing about whether the 12-hour or the daily gives you a better swing trade entry. The truth is, use them in combination because they can be so effective when you use them side by side. So this is a 5.42R trade that played out on a 2-week AMD using a 12-hour order block. Let's get into it. So first and foremost, what's the best time frame for swing trading? I like to use the 12-hour time frame for my execution, and I'm always trading in line with weekly, 2-weekly, or monthly AMDs. Accumulation, manipulation, distribution. This tells me what phase of price we're in. So if I take Euro US dollar right here, and we bring up the 2-week price chart, what you see here is that price moves aggressively into the high of the previous candle. Then what it does is it rejects, and in doing so creates a 12-hour order block, which sits right here. So I can mark that so we can see it visually. So as a front run entry, this is giving us everything we need. We've manipulated a previous candle's high right here. This becomes our sweep. We've raided the external liquidity at the high of this candle range. We now have structure closing down, creating an order block, which we can then tag to target where? The low of the candle that we're manipulating. So this becomes our higher time frame target for price. So that's how to use a 12-hour order block in context of higher time frame candle behavior. We get manipulation, shift, enter at the order block to target the low. This obviously played out perfectly. And if you were to take that trade with aggressive management, meaning you just cover the high of the order block, you've got yourself a nearly 5.7R trade. That's why you can front run the daily time frame. So let's play it out on the daily. So on the daily time frame, we see the exact same thing. I've actually already got my levels marked from the previous analysis. What you see here is the 12-hour order block is invisible here. It's the front run entry. Now, if I take this away and I execute on the daily time frame, same idea. Accumulation, manipulation, distribute to the low. I need to wait for internal range liquidity to form on the daily time frame. That doesn't happen until we flip this level as an order block. So this now becomes the daily order block because we get buy pressure into the manipulation. Then at the close of this candle, we form the order block. This is a close through, buy to sell. So the entry would then be on the daily order block right here. And again, if you covered the high and then targeted the low, you've got a 2.46R trade. So the 12-hour gave you the opportunity to front run the daily, but it can happen in reverse. Let's check out EURGBP. So in this example, I'm going to take away the monthly time frame, but you can see right here, the whole monthly range is liquidating a previously closed monthly range. So at this point here, we're potentially looking for reversals. And what we get forming is the formation of a manipulation candle on the 2-week time frame. We have accumulation, then price breaks below but closes inside the previous 2-weekly range. So this exposes the high of this candle as our higher time frame target. Now, what we get here at the close of this candle is 12-hour structure. So we have, at this point here, let me zoom in on it, a 12-hour order block. So let me mark that. And you see that's the sell to buy. So what we could look to do is buy from the order block to target the high. That would give us a very good trade. However, you see that what price does is it raids below, induces sells, and then breaks higher. So if we look at the daily time frame, we can see what's going on. So here is our levels. What do we see? Well, first and foremost, when we were buying here, we were sweeping a previous daily candle, which is not something that I would love to do. And what we also see is that we actually have the proper structure on the daily time frame, which is that we have a daily order block, and we also have the formation of a daily bullish fair value gap right here. And that is the inefficiency between candle 1 and candle 3. So this retrace looks so much more normal. We're retracing into the order block, and if this is going to hold and this is going to deliver as an accumulation manipulation, distribution, this is where it's going to do so from. So we can instead enter at the fair value gap, cover the swing point, and we get a very, very good 2-hour trade that delivers perfectly to the high. Let's flip back onto the 12-hour. So actually, what was the low of our order block is the point price is going to manipulate to then trade higher. So the whole premise of this video is use timeframes for your execution in conjunction with each other. I always like to execute on the 12-hour time frame, but I'm always mindful of the daily, the 2-daily, just to see where those points of internal range liquidity sit, and so that I can optimize my entry. And that's how to use the right time frame for swing trading. From there, we can obviously optimize further using the lower time frames, but that's a completely different video. If this is interesting, check out my 3-part series on accumulation, manipulation, distribution. It's on my YouTube channel for free. See you on the next one.